Welcome to Daily Tesla News. It's December 7th, 2023, and the first order of business is Tesla prepares for Giga Shanghai Phase 3 expansion for the $25,000 vehicle. And Tesla had actually started preparations for Phase 3 in 2021, and they even formed a team, but they suspended those actions in the summer of 2022, likely due to the macroeconomic environment. But Elon Musk, Tesla's CEO, said in an interview on December 5th that significant progress has been made in the mass production of this new model. According to previous information from the supply chain, this car will not be delivered until mid 2025 at the earliest. We've gotten clues in the past that the $25,000 car is going to look like the Cybertruck or be inspired by it, and I have a feeling that people in Asia are really going to be attracted to the cyber vibe. I thought Farzad had some good thoughts regarding the release of the vehicle. He thinks Tesla should not announce it, just start making release candidates, let the internet go wild, and once the first one is ready to roll off the line, open up the configurator and let people order. His reasoning for this is that the car is going to have such a huge demand and it's going to take 12 to 18 months to fully ramp up, so the inflow of orders once the website is open will vastly outstrip supply, so might as well not announce it. Like when you think about it, Cybertruck has 2 million pre-orders for what people thought was going to be around $50,000. So if people are thinking this car is going to be $25,000 and it's more conventional looking, then we could see triple or even quadruple the amount of pre-orders. So I think Tesla is going to keep this very quiet because they don't want to cannibalize sales of the Model 3 or Model Y. But right now I'm forecasting Tesla produces 100,000 of these little $25,000 cars in 2025 at Giga Austin. We'll see. So moving on, how Elon Musk may be spinning up a plan B to save X. Elon Musk may have a plan to save X, and it doesn't involve advertising, free speech, or financial services. There are fascinating signs Musk is turning his attention to AI. Musk has publicly admitted in the past that he overpaid for Twitter and did his co-investors, and it's still unprofitable. And then last week, Musk told the Disney CEO to go F himself. And while this could have been read as a corporate suicide note, an alt take is that Musk is already minimizing the advertising business, at least as a revenue and valuation driver, in favor of Grok. This was actually my take at the time. After Musk cussed out Walt Disney, I tweeted that this is why X is becoming more product focused. Eventually, X won't need advertisers as bad as advertisers need X. Elon is transitioning X into a profitable business by making the platform subscription-based and offering good value in return. Today, Elon announced that Grok is rolling out to all Premium Plus subscribers in the US, who, including myself, are paying $16 a month. So Elon obviously said go F yourselves to advertisers, not because he's mad about losing their money, but to prove that he doesn't need their money. He went to Israel on his own volition. It was not so that he could get the advertisers back. Elon and X could care less about the advertisers. XAI Corporation yesterday disclosed in an SEC filing that it's raising up to $1 billion in equity funding. No investors were listed. It's unclear if XAI sits under the same corporate umbrella as does Twitter or X, but it would make sense that they share DNA, particularly given that XAI is expected to leverage the flagship's content and user base. And this matters because if XAI is to eventually become valued at where OpenAI sits today, at the relative dawn of generative AI adoption, then those Twitter shareholders would be deep in the black, which is an expression that means in the profit. I mean, OpenAI is currently valued around $80 billion. So yeah, $44 billion for Twitter, the platform that is going to power the most up-to-date language model in the world in Grok, is starting to look like a bargain. But with that being said, XAI is staring up a steep hill, even if it gets to ride ChatGPT's coattails. It's also expensive. Musk may have access to some excess cloud computing space via his vast business empire, but he'd still need billions of dollars to compete with all of the AWS credits that OpenAI have received in exchange for equity. Musk will find the compute. He talked about the possibility of leveraging all of the unused compute across America in Tesla vehicles. So, let's say your Tesla vehicle is parked in your garage, not being used. XAI could tap into that compute, and so all of these Teslas across the world will be contributing to running Grok. And Tesla owners might feel upset that their car is always being put to work. Some people might look at it as like a child that needs to rest, but it's a give and take. In return, you get to use Grok while you're driving. But the bottom line is an awesome statement from Musk. He says, I have never lost money for those who invest in me, and I am not starting now. So Musk felt like he was overpaying for Twitter at the time of the purchase just because of the quick drop in the market that happened afterwards. So he did try to get out of it, but was eventually forced to pay the initial price, and even so, it looks like he's going to make a handsome return for investors. So moving on, the Stellantis CEO says companies losing money on electric vehicles may only have until 2030. He expects before the end of the decade that automakers could start to drop out of the market because of the electrification transition. So he's merely saying what the Tesla community has been saying for the last couple of years. The competitors in the best position to survive that, he contends, are the legacy companies who are making a lot of money on gas and diesel powered vehicles so that they can move to electric vehicles and other alternative fuel technologies. Tavares frequently has dubbed this era as Darwinian, where only the fittest will survive, driving Stellantis' efforts to reduce costs and lower its break-even point. What we believe is that the guys who are using what we would call as a shortcut, the legacy business, to fund the future are going to be the guys who are going to be in the best position to accommodate to those different scenarios. Because basically, we are doing very good money with the legacy business. There is significant money with the EV business, but there's still a lot of uncertainty out there. And that's why you're going to go bankrupt. He just said that he expects automakers to fall out of the market because of electrification, but then he says we're going to take our time and build up our cash pile because there's a lot of uncertainty still with EVs, so we're just going to wait. And they're waiting because they're scared of two events next year that are driving the unstable outlook: the US presidential election and the European Parliament election, Tavares said. The results could have substantial implications for how quickly consumers adopt EVs. Well, I have an idea. What if you invest all of that money that you're making into developing electric vehicles? Maybe that will influence the outlook from the government parties. We're a capitalist nation. Policies are meant to support the private sector, not dictate it. This is the difference between this guy and Elon. Elon doesn't care if it's the Democrats or the Republicans. He's got a mission, and he's going to do what he has set out to do regardless of the policies that are made. The Biden administration has proposed ambitious fuel economy standards that would nearly halve fleet fuel consumption by 2035, and if former President Donald Trump or another Republican candidate wins, those targets could be rolled back. And depending on those results, there could be more bumps to making that turn to EVs. The fewer the obstacles, the sooner automakers that aren't making money on EVs could be endangered, Tavares said, putting out an estimate of 2 to 3 years before they begin collapsing. If it's purely linear with the amount of capital that you need to fund for products which structurally are less profitable than the ICE vehicles, they are going to put themselves in trouble quite quickly, Tavares said, and in that case, a shorter period of time for them. EVs are not less profitable than ICE vehicles, as indicated by Tesla's robust margins. They are just not as profitable for Stellantis due to their need to maintain contracts with existing suppliers. It's tough for these companies to get out of their old business models, and that's why newer companies are taking a larger and larger share of the market. They now represent 7% of the global auto market, and this is part of the narrative forming recently that EV adoption is slowing. They're seeing legacy EV adoption slowing, so they think the whole market is slowing, but it's actually just these new car companies taking up a big share of the market. Moving on, so Farzad just tweeted this out. It's an interesting angle on why the Cybertruck is going to be a hit with trades workers. So this guy ran a construction company for 20 years with about 24 tradesmen, and he can say with 100% confidence that tradies care about the appearance and the cost of operating their trucks in a big way. Unless you are a real gearhead, trucks look pretty much the same from year to year. Tradesmen keep their trucks as long as they don't start looking shabby and they remain reliable. Dents and rust make a truck look shabby. For tradesmen, the appearance of your truck is a reflection of your success. None of the vloggers are talking about the fact that the Cybertruck will not have dents or rust. The odd tradesman will care about how fast their truck is off the line or how much it can tow, but 100% of tradesmen care about what their truck looks like. It may take a while for tradesmen to overcome their bias against electric vehicles, but I can assure you that the tradesmen will become the real market for the Cybertruck long before the "I gotta get the Cybertruck because it's cool" demand dies down. The fact that the Cybertruck will be much cheaper to operate will be another huge factor for the tradesmen. So some stuff to think about there, and Jay Leno, a huge fan of cars, was just spotted driving a Cybertruck yesterday.
That's awesome. How is it, Jay?
It's not mine, I'm just using it.
Oh, yeah?
Sure, that's awesome, brother.
Is it Elon's?
Well, actually belonged to a buddy of mine. It's truck number 5.
Oh, really?
Just came off the line. You know, it's incredible. It's as fast as the Tesla Plaid. It's
So that is today's Tesla stock news. And if you guys want to continue the conversation, you can join the channel as a member to gain access to my Discord community. Today we were talking about where we think the next Cybertruck production line is going to be. And if you are unfamiliar with Discord, it's basically a platform that enables massive group chats. And I'm going to post a tutorial once you join as a member showing you how to join the group chat. So thank you guys for watching and have a great day.